With the best all-inclusive vacation deals to Mexico and the Caribbean, booking your getaway with Cheap Caribbean Vacations means you have more freedom to do your deal. Whether you enjoy snorkeling, endless margaritas, and more, or simply soak up the sun and sand in a tropical paradise, Cheap Caribbean Vacations has your deal for that. Plan and book the exact getaway you want at exactly the right price for you by using our exclusive Budget Beach Finder, or find a featured all-inclusive package to Jamaica and do your deal at cheapcaribbean.com.
And good afternoon. We are doing it live right here in the 4 o'clock hour, right after Ben Shapiro and right before the 790 KBC News Blitz with Randy Wang coming on at 5. Mottek On Money at 4 here, live on the air on 790 KBC, streaming live online worldwide at kbc.com and the on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, all your favorite podcast platforms. Yeah, and we're on YouTube too. And we have a winner today. Stocks finishing higher in what turned out to be a volatile trading session. Investors gearing up for the Fed's interest rate decision tomorrow. We'll be getting that decision as well as a statement on the economy and then a full-blown news conference from Fed Chairman Jerome Powell. It was a record-shattering day today for the broadly based S&P 500. The S&P 500 came in for a closing gain of 29 points, selling at 5,178, good enough for a new record high. This was the 18th record high close, by the way, for the S&P 500 so far in 2024. The Dow came in for a closing gain of 320 points. And it looks like the NASDAQ also finished higher today, up 63 points in what turned out to be a seesaw session. This has the Federal Reserve got together. These are the Fed policymakers, that is, getting together to decide what they're going to do about interest rates. It's widely expected they will be holding the line on short-term benchmark rates when they announce that decision tomorrow. And that'll be coming down at 11 o'clock Los Angeles time. And then Fed Chair Jerome Powell will hold a news conference a half an hour later to discuss that decision and provide details on the Fed's outlook. Of course, the market will be hanging on every word. The bond yields did tick lower today, down to looks like 4.30%, let's call it, for the yield on the 10-year note, coming off the highest level seen since last November. Investors have been reevaluating when the Fed might start lowering rates lately, as the last mile of bringing down inflation is proving difficult, according to an analyst at BlackRock. With the central bank's two-day policy meeting underway, some Fed officials might be worried about cutting rates due to signs of stickier inflation in the services sector. And so we, of course, are watching that very closely. In the meantime, the world has seen the last, at least for the moment, of negative interest rates. The Bank of Japan today pushed its official interest rate back up to at least zero. Japan's central bank was the last holdout around the world. Its decision ended a 12-year global era that saw central banks enter uncharted waters in an effort to stimulate major economies following the financial crisis back in 2007 through 2009. Bank of Japan ending negative interest rates with its first hike since 2007. By the way, the Fed kept the Fed funds rate effectively near but just above zero from late 2008 to 2015, and again from March 2020 to March 2022. Negative interest rates basically means you would have to pay the bank to put money in it. That didn't go over. That idea certainly didn't go over well here in the U.S. and ultimately has not happened. The price of oil, meanwhile, marking back-to-back a movement higher. In fact, now we're at the highest in 5 months, a new 5-month high today after today's trading. We see the price of crude oil in New York moving up 75 cents to $83.47 a barrel. That's the second straight finish and the highest since last October. And Brent crude in London, the global benchmark, moving higher as well at 49 cents to $87.38 a barrel. Also the highest we've seen since late October, putting upward pressure on inflation. Chipotle Mexican grill stock is up more than 2% in after-hours trading after Chipotle announced that its board has approved a 50-for-1 stock split. Chipotle said its restaurant managers will get a special equity grant in connection with that decision. Chipotle stock today had closed up $24 at $2,797 a share. Coming up, we'll be speaking to economist Veronique de RUGY at the Mercatus Center at George Mason University, a nationally syndicated columnist about what's happening with the economy, crime impacting businesses, continuing in a big way here in Los Angeles. I'll discuss that and another big story. The Association of Deputy Attorneys in Los Angeles blasting L.A. County DA George Gascon for trying to get the L.A. County supervisors to what they call pay a political ally to protect him from employee retaliation lawsuits. I'll talk about that, as well as the intense contest for L.A. County DA with the November election, which will have the incumbent and former federal prosecutor Nathan Hochman in that contest in November for the important L.A. County DA's race. I'll talk about it, and I'll talk about it with former Los Angeles County District Attorney Steve COOLEY. But first, on your money, the markets, the economy. Joining us live now, money manager Ken WINANS, president of WINANS Investments, market historian, author of Investment Atlas 1 and 2, also Forbes magazine contributor. Ken, thank you very much for coming to the line this afternoon.
Frank, it's always a pleasure, and I was so glad you talked about what happened with Chipotle, because I still believe that the unsung heroes of the COVID pandemic, and certainly 2008, 2009 blow off, the Great Recession, have been the restaurateurs and the retailers. I mean, it's when you think about what these companies had to do to try to stay in business through these two catastrophic events, it's quite amazing. And I think what Chipotle's doing, trying to incentivize their managers and the employees to do a better job, I mean, hats off to them. And in fact, it is interesting to note that today, retailers and restaurants were one of the top performing groups in this market. So this rally that we have right now is very, very different than the rally from last year. Last year, you always talk about the Magnificent Seven. This is now looking at a broadening, and it's beginning to include, as I mentioned, the retailers, the restaurants, the consumer stocks, the oil companies. They were the leaders today, not tech. So again, I think that this is a healthy sign that at least a lot of areas of the economy are doing better. It doesn't mean it's perfect. It just means that companies have figured out what they need to do to make things work in this environment. And then I will just make a comment that what you talked about, negative interest rates, we can certainly put that in the annals of history, because we will never see that again. And I mean, never is a never. When you look at the massive amount of liquidity that was injected to the economy after the 2008 debacle in the economy, again, we're looking at a resetting of all that. And again, it's amazing how these things take over a decade to have the pendulum swing the other way, which is what we have now, and what the Fed is going to be discussing tomorrow and the next day on battling the inflation issues.
On there live with money manager Ken WINANS. For a while there, negative interest rates were considered here, right? But there probably would have been such an uproar about that. Can you imagine paying a bank to have money on deposit?
Well, you know, a lot of us right now are beginning to, I mean, you know, we financial historians, you know, part of our job is to try to chronicle what the heck has happened. And I'm of the opinion that, you know, as we look at the great sins that have been committed, the economic sins that have been committed, you know, really in the 21st century, one of them is we kept rates at zero for way too long. And it was politically expedient to do so. Nobody wanted to upset the apple cart. But the reality of it is, rates should have been normalizing long before this Federal Reserve had to do the jolt they did in 2022. That shocked everybody and shocked everything from credit card users to people trying to get a house to companies trying to get credit for their businesses, all of it. But that's the nature of what happens with the Federal Reserve. The economist Milton Friedman once said, we'd be better if we put the whole thing on a computer model and let it run its course. Maybe with AI, we might, that's an interesting concept. AI-driven central bank policies. Maybe that's where we go with this. But we're still dealing with the fallacies of political interaction within central bank thinking, and it goes on globally, not just here.
In the meantime, we see credit card interest rates at all-time highs, and it's widely expected the Fed will hold the line on benchmark rates when they announce that decision tomorrow. What do you think is going to happen tomorrow, and how long are we going to see these rates before they supposedly finally come down here?
Well, here's the thing. You know, I don't necessarily think it's a bad thing. That, you know, by them not dropping rates tells us that the stock market is not wrong about the economy. The economy is actually, again, generally speaking, you have to take all sectors and all regions of the country in scope on this. But the reality of it is, things are going in the right direction. And so when they are, the Federal Reserve is not real inclined to need to drop rates. I think, and I feel bad every time you see a representative of the Federal Reserve having to address to elected officials why and how of monetary policy in an election year. I mean, Jerome Powell was just absolutely grilled last time he went to Congress, and I'm sure he'll get it again. But again, the rates that we're at today are fairly normal when you look at it historically. Now, with that being said, I think that there are going to be several political hot buttons that come up. One of them, you just mentioned it, credit card rates. You often hear about, wait a minute, why are people paying so much money in credit to banks and all these other groups? And the other one on the other end of the spectrum is going to be, why is it that money market rates, just the typical rate offered at a bank or an investment firm, below Treasury bill rates? And it's complicated. It's beyond the scope of what we're talking about today. It's something that was agreed on a long time ago. But this is an election year and a very contentious time. And I think that several politicians are going to try to score points to try to make the banks and the investment firms the bad guy on harming the little investor. And this is what they're doing. So I'm expecting to hear that a lot as we go through the summer.
And, of course, we'll get the announcement tomorrow morning at 11 o'clock our time. It'll be back east where the Fed chairman will be speaking at the Fed headquarters there and be taking questions from the financial press. And markets, of course, will be open and tuned in to what's happening. In the meantime, on the inflation front, of course, we did get those hotter-than-expected readings recently, and also on the job front, unemployment suddenly at a two-year high. Fed, of course, concerned about both of those readings, and we'll be taking all that in. We'll get more on that tomorrow, and we'll have complete coverage here. In the meantime, largely the inflation number is being pumped up by fuel prices once again. We had our gas prices up about 20 cents a gallon higher than just a month ago at last check, and we're seeing oil hitting new highs for the year here, Ken, close to $84 a barrel now. Let me see what we got in London, nearly $88 now. In New York, at around $83 a barrel. Where do you see that go, given the upheaval in the Middle East and all the other geopolitical tensions here?
It's less geopolitical, Frank, as it is seasonal. We're getting into what they used to call the summer driving season, and then on top of it, there is a sense that travel this summer is going to be rather interesting from the standpoint people want to get out. And then what reports have been coming out, the airlines are actually going to have fewer planes flying because the 737 MAX is having its issues. So you're looking at all these things tugging at people's pocketbooks. But I would also bring up, it's not just oil. There's actually been several reports out. Some well-known market strategists globally have been telling their clients, load up on commodities. I mean, it's kind of ironic when I tell people, what is a better performing commodity than crypto since last year? Well, it's cocoa. Cocoa was up about 300%. And a lot of it has to do with what's going on in Africa and certainly in Brazil. But the point is, commodities overall are going to be in decline. And it's exactly at the same time when we're in an election year, when they're talking about giving pay raises. I mean, look at what Governor Newsom did with fast food workers. There's more of that to come. So you can argue that inflation could potentially have a double whammy as we go through the remainder of 2024. And again, this is the kind of thing the Federal Reserve is going to monitor very closely. And it's not their job to win fans. Their job is to try to keep the inflation from getting out of control. And one final part of this, the mistake that was made in the 19th.
With the best all-inclusive vacation deals to Mexico and the Caribbean, booking your getaway with cheap Caribbean vacations means you have more freedom to do your deal. Whether you enjoy snorkeling, endless margaritas, and more, or simply soak up the sun and sand in a tropical paradise, Cheap Caribbean Vacations has your deal for that. Plan and book the exact getaway you want at exactly the right price for you by using our exclusive Budget Beach Finder, or find a featured all-inclusive package to Jamaica and do your deal at cheapcaribbean.com.
What companies deserve your hard-earned dollar? Which would you want to work for? How can you know if they share your values? Just ask us. Just Capital is a nonprofit that tracks who really means business in supporting workers, customers, communities, the environment, and shareholders. We measure progress, track success, and help them be better. When you see the Just Capital seal, you know what's real, because just business is better business. Visit justcapital.com to learn who makes your dollar count.
70s, is the Federal Reserve raised rates and lowered rates several different times in that decade. And Jerome Powell said loud and clear, we will not forget the mistakes of the 1970s. We will hold the line. So again, go back to what you asked me earlier about interest rates. I honestly don't think they're going to be dropping anytime until the fourth quarter, and even then, I could even make the case that it goes into 2025 before there's real serious thought about dropping rates. So we'll just have to see.
All right, you mentioned it, crypto, Bitcoin. It goes up and it goes down, as it turns out. Had that big run up, but right now down about 6,000. You're back to 61,901 on the day. Crypto's doing what they do, wide moves on an often daily basis. For a while there, we had that big run up, and now Bitcoin back to around this just below 62K. What about cryptos, which you certainly keep an eye on?
Well, I do watch them, and in fact, it's interesting. I'm actually going through a trader's training course right now. I'm a commodities guy, so crypto's been added to the complex, as we call it, and it is fascinating to see that although I do not think crypto is a currency, I mean, I bring that up many times. It doesn't act like a currency. It's not in that context, but as a digital asset that trades, it's always the age-old thing, Frank. It's supply and demand, and I do think that when especially I'm talking about mainly Bitcoin. When Bitcoin hit its high, I mean, you had you did have a lot of people rush in. Well, as people were rushing in, I'm talking about newcomers through the ETF world. At the same time, there were people selling, and I think people were taking some profits. I mean, it's healthy. You don't want something going straight up forever. That's where bubbles get produced, and bubbles end ugly. So this tug of war between the bulls and the bears is very, very healthy, and I would just say that that it is very, I mean, I think it's safe to say the report coming out today from BlackRock, I mean, more and more Wall Street institutional money is entering crypto, and rumor has it that a lot of the public pensions are now considering it an asset class. So I think the demand is there, but again, nothing goes straight up forever, and I've just encouraged people not to get emotionally drawn into things and certainly understand what you're looking at. But Frank, also the other thing that we have to remember, a lot of the crypto-related companies actually trade as stocks. One is Coinbase. I mean, Coinbank, you certainly could buy that as a stock and have a crypto play in the second degree. So it's things like that people should consider on how do you want to get on the trend. You don't necessarily have to buy crypto.
On the air live with money manager Ken Winans. And Ken, what about the Magnificent One? You mentioned NVIDIA earlier. It looks like, let's see, it's up there just below just $8.93 and change here at last check, up about $9 today. What about that one?
Well, it's funny, isn't it interesting? We're down to one stock, Frank, after everything we used to talk about Apple and Google, and now we're talking about NVIDIA. I would just say this. I really do think that the rally for the remainder of the year, not to say techs are necessarily going to go down, but I think the other areas of the stock market are going to go up. And so I would just encourage people, especially people who already have very heavy tech exposure, to mainly look around at some other areas. I mean, the news is going to be interesting throughout the rest of the year. I mean, my only problem with NVIDIA is that it is so far off what I would consider a technical buy point that it would have to at least pull back a bit more for me to be comfortable with adding to my positions in it when I look at other tech companies that I could possibly step into. And I know on the last show I talked about the IT stocks, and that's just a good example. They have done very well. They're supporting AI. Everything is going great there. And so I think you just want to begin to look at those other areas. Frank, one thing I did want to bring up, and I think that this is going to be news that people are probably going to be shocked to hear, but it's going to be a reality as we go through the rest of this year. Nordstrom's is considering going private. Macy's is already in that direction. I find it interesting that we're having companies basically decide that it's no longer worth being a publicly traded company, that it's worth going back into the private sector. I actually believe we're going to hear a term again that we haven't used in a long time called leverage buyouts. And I think as bank credit begins to expand, as banks are getting more comfortable again, you're going to be finding companies basically going back on the private shelf. And that might be the new theme as we go through the next couple of years. big companies using debt to go private. And it was a big theme in the late 1980s, and I think we're going to probably see it play through again. But those are the things, these movements in the economy, these changes, this shift around is going to play a role. The one thing that I would also say very quick is that I'm finding that, that people who maybe used to buy into the idea of global asset allocation, meaning that an American investor is going to go stick money in the third world, I will tell you right now that a lot of people have very clearly soured on this. I'm hearing it from people that I've talked to, that these investments have not worked out for them, and they're going to primarily buy U.S.-based investments. The best bet is at home. They're no longer going to be searching abroad. So if there's a theme this year, money is coming to the U.S., and it's staying in the U.S.
All right, just about out of time here, but any other specific places where you would be putting money now and or taking it off the table?
As we're going into summer season, I'm just going to throw out the restaurants, and two in particular, Darden Foods, DRI, and Texas Roadhouse, TXRH. I think restaurants are going to have a very, very good summer as people go out more. And then last but not least, if you're looking for a consumer product, go look at Monster Beverage, MNST. I mean, again, the consumer stocks are moving. That is a stock that has done very, very well. And you might want to, I think it's still early in its rally.
Terrific, Ken. Thanks very much for taking the call here. That is Money Manager Ken Winans, president of Winans Investments, market historian, author of Investment Atlas 1 and 2, and Forbes magazine contributor. Ken, have a great afternoon, and thanks again for taking the call.
Take care, Frank. Good night.
Folks, people like you and me have our ear to the ground on all things business. We like to be informed and indeed well prepared. As important as finance is, I want you to have a plan in case you are hit by someone not paying attention to the road. Thinking ahead serves us well, and even still we can get caught off guard as people are so focused on their destination that they might not have a plan if they're in an accident that's not their fault. That's why I encourage you to put my friend attorney Clark Fielding's number in your phone. That number is 833-88-SHARK. So if you're in an accident, you'll be ready with your strategy to make Clark Fielding your very first call. Fielding Law aims for the highest possible settlement, considering you might need long-term care, rehab, compensation for lost wages, and any ongoing physical or emotional pain. So if you're hurt in any kind of accident, call for a free consultation with Fielding Law. You can trust them. They're honest, respected, and your strategy in case you get into that unexpected accident. Motorcycle, truck, pedestrian, scooter, hit and run, boating, bike accidents, you name it, the number to call, 833-88-SHARK. That's 833-88-SHARK, or go to clarkthesharklaw.com. 790 KBC welcomes Dweezil Zappa coming to the Orpheum Theater August 3rd. Tickets are on sale now at Ticketmaster.com. Right now, caller 9 wins at 1-888-795-2222. You can get a pair of tickets to the show if you're caller 9. Call right now, 1-888-795-2222 for Dweezil Zappa coming to the Orpheum Theater on August 3rd. Mottek On Money continues here in 790 KBC, a rocking day for the stock market with the S&P 500 ending at a record high close. This is the 18th time we've seen that happen so far in 2024. The S&P 500 moving up 29 points, settling at 5,178. The Dow coming in for a closing gain up 320 at 39,111. And the NASDAQ gained 63 points at 16,167. The yield on the 10-year note eased to 4.30%. Price of gold up $2 at $2,161.80 an ounce. The all-time high for gold, which was hit recently, is $2,203 an ounce. Keeping an eye on silver now, which has been moving higher as well. Today pulling back 4 cents at $25.09 an ounce. Taking a look at the cryptos, Bitcoin, volatile day there. Looks like down about 5,700 here at 61,901. Ethereum is hovering at around 3,173, and Doge is back down to 13 cents. Mottek On Money continues here, 790 KBC. Good afternoon. Crime impacting businesses as well as residents in the Los Angeles area continuing to be a big story here. Another big story, the Association of Deputy Attorneys in Los Angeles blasting L.A. County DA George Gascon for trying to get the L.A. County supervisors to pay for what they call a political ally to protect Gascon from employee retaliation lawsuits. Let's talk about that and everything else right now with the Honorable Steve Cooley, former Los Angeles County District Attorney who served in that important post from 2000 to 2012. Steve Cooley, thank you very much for taking the call here this afternoon.
Always my pleasure.
What's your reaction to the statement? I did see it from the Association of Deputy Attorneys in Los Angeles, blasting the incumbent DA for trying to get the supervisors to pay for what they call a political ally to protect Gascon from employee retaliation lawsuits. What's your...
With the best all-inclusive vacation deals to Mexico and the Caribbean, booking your getaway with cheap Caribbean vacations means you have more freedom to do your deal. Whether you enjoy snorkeling, endless margaritas, and more, or simply soak up the sun and sand in a tropical paradise, Cheap Caribbean Vacations has your deal for that. Plan and book the exact getaway you want at exactly the right price for you by using our exclusive Budget Beach Finder, or find a featured all-inclusive package to Jamaica and do your deal at cheapcaribbean.com.
Welcome to Talkville,
the ultimate Smallville rewatch podcast. Let's get into season 4, episode 3, Facade. People get picked on. I got picked on. But Scabby, the whole school just hurt me. I felt like it wasn't real.
If I may, I want to defend the storytellers. The people who created the show wanted you to feel like these people were the worst people ever.
They pretty much said the whole school of Smallville High are bad people.
Jump in now or catch up on any of the past seasons of Talkville on YouTube or wherever you listen.
Reaction to that report today?
Well, I think the Association of Deputy District Attorneys is doing exactly the right thing in exposing it and blasting Gascon. Gascon, since he was first elected, has been abusing and not really been faithful to the civil service system whatsoever. He misuses the assets of that office. And so far, it's kind of strange, he's been getting away with it. I'm surprised the Board of Supervisors isn't kind of waking up and going, you know, this guy's created $100 million worth of liability for us, and he's costing us money. And oh, by the way, he's doing a bad job. But they seem to be asleep at the switch also. But this Sharon Wu gal, she's basically, this is a misappropriation of public funds as far as I'm concerned, because county money is being used to basically have a witness advocate for George Gascon. That's all it is.
And I see the news release put out by the Association of Deputy District Attorneys says it's also no secret that Gascon's this is quoting the news release here, that his anti-labor managerial missteps have cost the county and its taxpayers millions of dollars in judgments and settlements, and now he's asking the County Board of Supervisors to pony up another $100,000 to pay a, quote, central witness, unquote, to defend him from employment-related lawsuits. You mentioned Sharon Wu as former chief deputy. What else do we need to know about this, and have the supervisors, in fact, acted on this?
Well, the $100,000, quite frankly, is pocket change compared to the I did the math this morning. I looked at all the different lawsuits, potential exposure, the cost of attorneys. I think he's looking at seriously in the range of $100 million with all of it added up. So the Wu thing, it stinks, but it's not nearly as bad as the position he's put the county in to pay for his egregious errors when it comes to retaliating against good, solid, professional deputies who are under his command.
A large field of candidates challenged Gascon in the primary, and now he will be facing Nathan Hochman, a veteran prosecutor, in the November election. Give us your assessment of how this is shaping up.
Well, Gascon's numbers in the low 20s are probably the worst showing for an incumbent office holder who's being challenged, perhaps in the history of Los Angeles County. You can go back to when I beat Gil Garcetti. I beat him in a landslide by 28 points, 64-36. This election between Hochman and Gascon, I expect Hochman to actually get into the 70s in thrashing Gascon. Gascon should really think about doing something good for the county and resigning, let the board appoint Hochman so we can start fixing the office, and then Gascon and Wu can go out and work on all the civil cases where they have to defend themselves for their misconduct.
And George Gascon was the subject of a recall effort. And what is the latest on that? Are we going to see a situation where there's going to be a recall and an election on the ballot here coming up in November?
No, you're not going to see that because time has run out in terms of actually the time frame needed to conduct the recall a campaign and setting the election and all of that. So you're not going to see it. However, I think that the people who really pushed the recall did a very, very good job at exposing George Gascon for the dangerous person that he is and all the misdeeds he's been engaged in a variety of ways. So I think it was well worth it. But the county's lawyers, high-paid lawyers, were able to string it out, take appeals, delay things, switch judges, bring affidavits against the sitting judge, so that there never could be a trial. So without a trial, there can't be a verdict. So the verdict's going to be on the first Tuesday in November of 2024 when George Gascon is voted out in perhaps the largest landslide against an incumbent ever in the history of LA County.
And we've had Nathan Hochman on this program. Certainly his experience in court is impressive compared to the incumbent. At least he's tried cases, right?
George Gascon has never tried a case, a criminal case or a civil case. He's never filed a criminal case or a civil case. He's never done what real prosecutors do, which is prosecute cases. He is like a figment, and he's a figment of Governor Newsom's imagination, who plucked him out of being, took Gascon out of being chief of police in San Francisco and said, "Oh, do you have a law degree? Oh, good. Be the DA of San Francisco." Well, they screwed that office up and made a horrible mess out of it. And then it comes down here when he's going to be beaten up there in a landslide and sneaks in and defeats Jackie Lacey. He's been exposed. He's on his way out. He ought to just focus on all of his civil suits and not waste his time campaigning, because he is going to be thrashed.
Well, we've seen what's happened in the Bay Area as crime continues to run rampant there. Of course, they had the successful recall of their DA, and now I guess there's a new effort here to recall the Alameda County DA, as people are just sick and tired of seeing this crime wave here in California.
San Francisco is actually sort of mending its ways bit by bit with the new district attorney up there. Alameda County, though, on the other hand, has deteriorated into a dystopian craziness. So many small shops, businesses, chains are just saying, no, can't do it anymore. Our customers are too valuable. Our employees are too valuable. We're gone. And this is a result of the radical left-wing Gascon-type Soros-supported district attorney they have. And so they now started a recall against her because they're up against it in terms of violent crime in Oakland particularly, and in Alameda County in general. So they've got to fight back, get rid of that DA, get someone in there who really knows how to prosecute, work with law enforcement, make the arrest, incarcerate the dangerous people in their society. Because right now, the crooks own that town.
The Honorable Steve Cooley, former Los Angeles County District Attorney, who served in that position from 2000 to the year 2012. Steve Cooley, thank you very much for coming to the line this afternoon.
Oh, my pleasure.
Mottek On Money continues here in 790 KBC. Good afternoon. We're doing it live right here in the 4 o'clock hour, right after Ben Shapiro. It's Mottek On Money on 790 KBC, followed by the 790 KBC News Blitz with Randy Wang. He'll be coming up in the 5 o'clock hour. But first, let's talk about the economy. If you saw the president's State of the Union speech recently, you heard that proposal to raise the corporate tax rate. In fact, punishing rate, the president wants to raise the rate from 21% to 28%. Joining us live now is economist Veronique RUGY at the Mercatus Center at George Mason University, also a nationally syndicated columnist. Veronique, thank you very much for coming to the line here this afternoon.
Thank you for having me.
And we see on Reason.com your latest column, which is headlined, Biden's proposed corporate tax will punish the average American. Give us your assessment of what's on the table here.
So the president, I guess because he just a kind of a welfare, class welfare type of fight thinks that corporations don't pay their fair share, and so it wants to raise the corporate income tax to 28%, which, by the way, would make the U.S. the second highest rate of all the OECD countries. And he thinks it's corporations that are actually going to be sending him a check, which is right. That doesn't mean that corporations are the ones that are going to be shouldering the cost, the economic cost of this. So, for instance, we know that workers, in the form of lower wages down the road, will be the ones shouldering the cost of this tax hike. The question is, how much of it? Economists are debating. It's anywhere between 66%, and some economists say it's 100%. Some say it's 28%. So it's like there's a debate about that. What there's no debate about is that, in large part, increase in the corporate income tax is shouldered by worker.
On the air live with Veronique de Rugy, economist at the Mercatus Center at George Mason University. Her latest column in Reason.com is headlined, Biden's proposed corporate tax hike will punish the average American. You know, for a while there, we had a lot of companies moving their corporate headquarters out of the country, to Ireland in particular, which still has a very low corporate rate, right? You expect if all this goes through, that we're going to see an exodus like we saw back in those days when corporate headquarters were moving to Ireland?
Well, it's possible, of course, but the problem is, last time we did this, we lowered the corporate income tax in 2017 to 35%, from 35% to 21%. What was also included was a minimum tax, and if you remember, the international authority like the OECD, the European Union, they actually want to get low tax countries to pay much more of corporate income tax. So they want to harmonize corporate income tax rates, and the U.S. under this president is actually really, would love to do this. So there's always a risk, right, that you're not going to be better off going somewhere else.
Right, and it should be noted the current Treasury Secretary Janet Yellen, the former Fed chair, also has spoken in favor of kind of making it at the same rate around the world, so people don't do what they've done in the past.
Yeah, so they already pretty much passed a global minimum tax, which means at 15%. And so it means, for instance, if you go to Ireland where the rate is 12%, you're going to have to pay that rate. And now it's going to be lower than the U.S. for sure. But then there's also the risk of a second part of those agreements that they're trying to push, which is to then redistribute part of the revenue to countries with higher corporate income tax rates, who are supposedly hurt by the fact that companies are attracted to lower rate countries. So the problem is that there are governments who are not understanding that it's in their best interest to keep the rate of corporations, the tax rate on corporations, relatively low. Because, I mentioned that workers will shoulder a lot of the tax hike in the form of lower wages, but customers, too, will do in the form of higher prices. Shareholders, of course, and not all shareholders of companies are high-income people. So it's not good for a lot of people. But on top of that, raising the rates is actually make companies less competitive on the international market. So sure, it's always an option to go and move somewhere else, but then the form of the global harmonizer are threatening too.
Yeah. Veronique, wish we had more time, but we'll have to stop there. Thank you very much for enlightening us on the subject. Veronique to RUGY at the Mercatus Center at the George Mason University, also nationally syndicated columnist, live with us here on Mottek On Money on 790 KABC. Stay tuned now for the 790 KABC News Blitz with Randy Wang.
Are you ready for hard-hitting observations?
She is the least credible person I may have ever seen on camera.
The Ben Shapiro Show brings you all the news you need to know in America today.
Guys, not everything is 4D chess. Why can't we just laugh?
Ben breaks down the culture and never gives an inch.
We all know I'm the #1 rapper in the world thanks to Facts by Tom McDonald.
The Ben Shapiro Show on YouTube or wherever you listen.